Welcome to another edition of INN CEO Talks. Joining me is Fabian Monaco, the CEO of Gage Growth, which trades under the symbol GAGE on the CSE and under the symbol GAEGF on the OTC. Gage is a Michigan-based cannabis company that has been a part of the remarkable industry in the state since adult use was legalized in 2019. In 2020, the sale of cannabis products was $985 million, and 2021 is already outpacing that stellar year. The Michigan market is large with a robust history of cannabis sales. In fact, the state was third in sales only to California and Colorado. Looking forward, Michigan is expected to be a top 5 producer where the industry is projected to employ more than 18,000 people. It's a market Gage is perfectly positioned to benefit from. The company is a premier cultivator, retailer, and brand known for its commitment to excellence. The company, which operates 3 licensed cultivation and processing plants, coupled with 11 contract grow agreements, and in addition, the company operates 10 dispensaries, which includes 2 Cookies branded outlets, and they have plans to open more. And it's worth noting, the company is also backed by legendary cannabis investor Jason Wild of JW Asset Management. Joining me now is Fabian Monaco. Fabian, let's talk about you being acquired by TerrAscend.
Yeah, for us, it's obviously a transformational acquisition. If you take a look at what we've been doing in Michigan, coupled with how TerrAscend is doing in their respective markets, we're just really, really excited for what's to come in the next little while. And more importantly, if you take a look at what are some of the top 5 markets that we'll see in the next little while in the U.S. cannabis landscape, and you look at the markets that we're in, frankly, just being Michigan right now, you take a look at the markets that TerrAscend are in, Pennsylvania, New Jersey, Maryland. We think those are going to be 3 of the top 5 markets over the next little while in the short term. So just really, really excited about the acquisition and really looking forward to getting to work and bringing the Gage brand and the Cookies brand to other states.
What was the value of that acquisition?
US $545 million.
That's a substantial acquisition. And what does it mean as far as your ability to operate, first of all, in Michigan, and then what will the ongoing relationship be between the 2 companies as you move forward?
I mean, in Michigan, it's heads down. We're working really, really hard. We're trying to expand our retail footprint quite exponentially, including our cultivation as well. Our processing asset, our packaging and distribution hub, and our phase 2 at our Monitor Township grow are all about to be completed by the end of this year. And more importantly, we have so many acquisitions in the mix in terms of retail and also applications as well to various cities. So really, really looking to expand quite exponentially as we approach the 2022 year in Michigan. And frankly, for us, again, we're going to have a big hand. A lot of the management team, if not every single one of the management team at Gage, is going to be coming over to the combined company. So just really excited about what we built in Michigan and also trying to transplant some of that know-how that we have, coupled with the know-how of TerrAscend, to really bring some best-in-class features of both companies to this combined entity.
So, I touched on the fact that you've got Cookies outlets already and that there are more coming. Bring us up to speed on what's happening there.
Yeah, so Cookies is a phenomenal brand. I think the last time I was on, I kind of compare them to they're the Nike of the space or the Red Bull of the space. They consistently perform exceptionally well across the globe and obviously in North America. So we're going to bring the Cookies brand in Canada very, very soon. We plan on opening a retail store in Canada. It'll be the first ever Cookies branded retail store in Canada, just like we were the first ever to bring a Cookies branded retail store to, frankly, the first outside of California when we had opened up that Cookie store in Detroit. We continue to, be a great partner of Cookies and vice versa. They're a great partner of ours. Looking forward to obviously having that relationship strengthen and open a variety of more retail, while also continuing bringing some of the top-notch flower that they produce to Michigan and Canadian consumers.
So you have a number of different streams of revenue because, of course, you're not just doing retail, you're doing cultivation, you've got a wide variety of other agreements. For investors, what are your financials looking at like right now?
I mean, we've had exponential growth since Q4 of last year. When we were in 2020, about two of our facilities were operational, and then the third large one came online near the end of the year. So 2021, we really hit the ground running, just like we're going to hit 2022 running, even faster. So we had phenomenal growth, quarter over quarter growth from Q4, about 10 million in sales, jumped to 17 million in sales Q1, 26.2 in Q2, and you're going to see further growth from us in Q3, Q4, and well into 2022. 2022 really is the banner year for us. Have spent the money on infrastructure, have spent the money on ensuring that this company can achieve upwards of 250 plus in revenue.
Wow. So as you continue to grow, are you going to be, what sort of financing models are you going to use, and what are potential opportunities for investors as you grow?
Yeah, we've been really prudent with shareholder capital since inception. We're one of the few companies out there that's in a net cash position rather than net debt. We don't have a lot of debt on our books. We've held really, really strong in trying to ensure that we did not take on that painful debt that cannabis companies were looking at the past few years, 17, 18, 19% cost of capital. We're now seeing, really low double digits, if not single digits in the space. And we're going to be taking advantage of something like that in the near future. And so that's what will fuel most of our acquisitions and our growth will be via debt. We do have the infrastructure and the financials to support it. And I think, that'll be music to the equity holder ears because we're not looking at raising equity anytime soon. Obviously, we're going to be acquired in the next couple of months with Terracent. They have 150 million of cash on their books as of last quarter, coupled with our 30 plus that we had on our books last quarter as well. So you're looking at, 180 plus combined from the last quarter. And again, just really, really bullish on what we can do, not only with that capital, but obviously with the assets that we already have up and running.
So some investors may be saying, well, did I already miss the opportunity? What do you say to them?
Not at all. No, not at all. I think the cannabis industry has been hit pretty hard the past couple months. Maybe not even past 4 or 5 months. So almost half a year of stocks basically just going downward. I think we've reached that valley now, and you're going to start to see some of them strengthen. Again, this is just in my humble opinion. So the opportunity to get into Gage as a Gage shareholder or Terracent as a Terracent shareholder, it's probably the most opportune time. New Jersey just went rec. So Terracent's going to be able to take advantage of that opportunity. They're one of the larger operators in New Jersey. Again, we're continually, moving forward on our infrastructure. So overall, I think it's a great time, probably the best time to get into cannabis since, Biden came into power and we had that Georgia Senate runoff.
It's really starting to look like the cannabis sector can start to see what looked like potential a couple of years ago and had really been falling off for quite some time. It's as though it's finally starting to catch the air that everybody had hoped it would have.
Yeah, no, I can't agree more. If you take a look at, where we were with the Canadian licensed producers a couple of years ago, obviously some pretty big disappointment at their performance and continual, disappointment in their performance overall. If you take a look at the U.S. market, it's just a different beast. You have better rules there generally in most of the states. Yes, it's federally illegal, but now is the best opportunity to get into the sector while it remains federally illegal. You're going to have a massive, massive run up, I think, in terms of just valuations once you see regulatory change or even, some of the Safe Banking Act provisions that we have all been craving for so long. If those get passed and, come into play here, I think you're just going to see a tremendous inflow of capital. I would say about 4 to 5% of the actual money that wants to be in cannabis is in cannabis today. And so that means we have about another 95% of good cold hard dollars that are just dying to get into this sector. And I think you're going to see that inflow in the next little while here as we hope for some regulatory change.
So between our first interview and now, you had some pretty exciting news, and I hope you'll come back in a couple months with even more exciting news.
Most definitely. Most definitely.
Wonderful. Thank you for joining me today.
Thank you very much. Have a great day.
You too.